I mean, can we really quantify this as like a correction? I mean, when I look, if you bring this chart
No.
up to me, this is like we're still like basically at all-time highs.
Yeah, we are.
Yeah.
Yeah, we're only a couple percentage points away from those highs. So yeah, and another thing too, I'm just going to bring up is that I'm starting to see like people say, there's this bit about I see the AAII survey, which is I've never used that survey, and as long as I've been trading, it's been being quoted so much, it's gotten so popular over the last year. I've not, I don't, and I'll bring this question up to you guys. That survey, as well as I see CNN Fear and Greed, which I've never really used that either. I see people talking about, oh, these things are showing that there's fear in the market. No, there's not. In my opinion, we're not there yet. We're not now the VIX, and I think that this is somewhat encouraging that we don't have a gap up again this morning. We
Yeah,
actually have some
I
some
think
red on
so.
the. What's that?
I agree.
Yeah. But have you guys ever used this AAII survey? It's
Never.
basically like for, I don't want to say for day traders, but I I don't like, and people are saying, oh, it's the most bearish it's been in like 20 years. I don't care because I've never used that and I've never seen that being a reliable signal of fear. I look at things like the equity put call ratio, which is showing no fear whatsoever in the market. And I think a lot of other things are just they're not there yet in terms of showing fear. And to Joel's point, we're barely off the high. We're a couple percentage point off the highs. So
It's the same crowd. It's the problem is in social media, they're all in the same damn stocks. They're all high growth names, growth, at all costs, and don't worry about valuation because all these stocks are going to be worth trillions of dollars. I mean, that's where all the money is. Like not all the money, but all this, the retail is really focused on growth. So retail is getting hit harder than probably your institutional trader at this point in time because your institutional trader is still diversified. So, I mean, I'm not saying retail is dumb. Retail's outperformed the institutional trader for 2 years. So, I mean, if you're going to be all growth, you're going to have hiccups. And maybe the story isn't over for these stocks. I don't think the Nvidia story is over. I don't think the Amazon story is over. I don't know if the Palantir story just maybe got to a level where it's probably, going to be hard to get back there for a long time. But, you never know. Like things can reignite quickly. And we have a very volatile administration, meaning we don't know what is coming next. There could be a deal tomorrow on tariffs and the market could be up 1,000 Dow points, like it could happen quickly here. So it's headline driven. We're nervous right now. I think to Christian's point, we're not even, and Joel's point, we're not even, really on the overall indices really down much here yet. Like I look at my long-term account, I don't know what I'm down. I'm down like 7 or 8% or something like that from the highs, maybe, and maybe not even. I haven't looked. It might be less than that. I mean, this is not like a, oh my gosh, I can't look at my stocks. I'm like, they're still doing pretty darn good. And if you're a little bit diversified, you got a lot of stocks doing really good. So I think it's just a lesson in diversification. I think that's what the market's teaching us here.